Joe Biden did it again. He did that, and he further restricted NVIDIA and AMD from selling chips to basically the rest of the world after the market closed for Jimmy Carter's funeral. God rest his soul. But again, this is not necessarily what the Bulls wanted. He basically said, you know what, to the Bulls, get out of here, you're fired. Because ultimately the Bulls have not been doing what they're supposed to do, and this is not going to help in any way, shape, or form. However, the good news is that it is an executive order that can be undone on January 20 when Donald Trump takes office. However, markets are already reeling from it, and they're basically voting with their dollar and saying, no, we are selling off. Futures are already down on open 0.25% to nearly 0.5% on the NASDAQ, reeling from those mega caps that took a bloody beating in after hours, right? NVIDIA instantly sold off nearly 1.1% on the announcement of the news below the 50-day moving average after the stock was showing weakness. So the Bulls essentially on Friday need to step up to buy this market back up. We are seeing a possible cup and handle on NVIDIA, which would signify more bullishness. But the thing is, if you sell off the entire cup, then it's not really a bullish pattern, right? NVIDIA is already down significantly, 138 on the closing basis for the day, closed at 140, right? So that was a good thing in the sense of it not necessarily going anywhere, but it is not what we want to see. The S&P also did not do anything very well, and simply put, it went down lower, right? In after hours trading, we're back down to 587.73, sitting right at that region where it was a rotationary point. I did like the wick that we had during the day, right? So if we look at the day, we can clearly see we had a lot of chop, but we came down pretty low, bounced right back up, but we're giving up all those gains going into after hours. And simply put, this is not what you want to see. You don't want to see broad spectrum selling, especially with everyone just being super, super worried about the Fed. We also got Fed minutes on Wednesday, which gave us a pretty interesting insight to what the Fed was thinking. Some of the highlights from that Fed meetings is really that they projected a lower GDP growth at a bit higher unemployment. Again, the Jerome Powell has come out and basically said, this is what we're currently thinking. It's subject to change. The economy was really, really resilient. They also talked about a lower run target at 25 basis points. It's just a mixed bag of things. It didn't give inspiring confidence to the market, but it also gave the tonation that we're not necessarily going to see hikes, but we're just not going to see rate cuts at the rate we were expecting. And subsequently, the market pared back some of the expectations for rate cuts. As we can see here, 95% and 4%, that last bit of rate expectations got crushed. And also March, which we covered in the Weekend Deep Dive, guys, link in the description below. We did par back to 60 and 37%, not expecting rate cuts all in March either. Now we're seeing all the way to May that we basically shifted this out completely, where we saw May being now almost like a 50-50 split. One person thinking 2 rate cuts, even 3, right? So just leaving a variety of what's out there, but really the consensus doesn't come into fruition until June, where we get to a consensus of at least 1 rate cut by that time, maybe 2, right? So we're still thinking that fluctuation of where it could be. And again, the markets are not necessarily in a good position. We can go through and basically discuss what we really need to see right now for the market to establish a bullish trend, to establish that dominance. Again, just a friendly reminder, the net speculative positions are shorting the market. There is bear fuel in the market possibly to go and continue us squeezing higher. We have the people to squeeze, but if the bulls don't step up, there's nothing to gain here. There's absolutely nothing to gain here, especially with the latest numbers for payrolls that we got. ADP coming in a little bit worse than expected, but the market basically saying, okay, if you expected JOLTS to be bad, right, and it came in good, and that's bad news, now it just seems like no enthusiasm is there, right? This number should have said, okay, Fed rate cut, but instead it caused them to par back rate cut expectations, especially with the minutes that were going on. What we're going to discuss also, what we're seeing with the bond sector, and then it's going to be very interesting to see the overall of how everything's going. Consumer credit also significantly underperform. So again, this is showing some strain on the economy, and I think the Fed's rhetoric, and the Fed may be realizing this a little too late, is that you're causing the hamster wheel to fall off, right? You're killing the euphoria, which has then been propping the market up, and subsequently it starts throwing concerns out there. As we saw reverse repo, again, trickling down slowly from the high of 400,000 back down to about 200,000, stabilizing out as bonds have been pushing extremely hard with the expectation that the Fed is not going to cut rates anytime soon. And also, another thing that's been pushing the dollar. The dollar has just been gaining strength, tackling above that 108 resistance point, and now pushing higher, which is also leading to larger dated bonds starting to really push. The 30, the 10, all subsequently were pushing higher. And thus, it's really hard to say, hey, this is going to slow down anytime soon. Right now, on the bond sector, we're establishing higher highs and higher lows. We're just beautifully going higher. It is what you want to see if you're bullish on the yields for bonds, but not necessarily what you want to see if you're bullish on anything of the market, especially if you're in TLT. The pain just gets lower and lower. I did say 86.22 was probably going to come to fruition. Now it has come to fruition. And it's just not looking like there's any light at the tunnel for anyone that's holding bonds, especially longer dated bonds. This thing is just wrecking you like no tomorrow. And subsequently, Bitcoin selling off as well the last couple of days, came back above 100, slammed right back down. There is zero enthusiasm in the markets for buyers. And the other concerning thing is that VIX looks like it wants to rip everyone's face off once again. This is what I'm looking at. I'm saying, okay, we're in this teeter-totter point of a cliff. Where could we be going to understand, hey, where is this all playing out? Well, simply put, let's go to the 4-hour just so you guys can see active markets as futures are trading. And simply put, you're on the rotationary point. I don't want to see the previous year's high be broken again. That was when we were back here. We dumped, we filled the gap. Okay, we got that over with. We got the wick that we wanted. Now we need to go higher. We need to push NVIDIA higher. We need to push AMD higher, especially with the latest downgrade to AMD, right? Chips are not having it, right? Chips led tech higher, and now they're leading us lower. There is patterns that could be established, but really, it's simply get back above 592. It is simple as that. Get back above 592, 593, get above the 50-day moving average, and start pushing. Start pushing to 600. Start pushing to 609. Start pushing. You guys, I've seen bulls buy up these charts like no tomorrow, and it's like everyone's on freaking holiday. I'm genuinely curious where the bulls are at. If you guys know where they're at, throw in the comment section below. And subsequently, the NASDAQ is even worse, pitiful story, right? Because coming down to the 50-day moving average for a second time really puts into question, are we going to break? Especially in after hours, you're just neck and neck. You're within dollar striking point of the 50-day moving average, and there is a nice long way down to the weekly 1.38% sell-off afterwards. You're not in a positive position. Yes, risk to reward is skewed to the upside because the upside break is significantly shorter, but again, I'm not seeing the enthusiasm. I'm not seeing the domination of the volume on the chart. We're just simply seeing charts selling off. We see companies like Apple, right? Had a weekly breakdown, failed weekly breakdown. Okay, so this is some positive, but we need to hold this, right? Apple and post-market not holding up at all, and also AMD. AMD coming back to the rotation point of 120.70, right? Rotating right back to its previous annual close. Again, I don't want to see this because I'm just seeing the head and shoulders kind of forming right here and leading to more downside. Isn't it AMD basically going to sell off? Again, their earnings are in February, approximately 4th. So that's going to be very interesting to see how it all plays out because it's not in a positive position. We also can look at some of the mega caps, right? I was talking about Meta previously. This is not where you want to be. You don't want to be coming back down to this weekly level and subsequently now breaking it because the NASDAQ shed like 1% after hours. That's not necessarily what we want to see. And last but not least, Russell. You got to get your stuff together on the Russell. Gapping down, forming new lows is not what we want to see. We wanted to see the Russell actually break out, and I said this was cause for concern when the Russell was not breaking out and subsequently just dumped afterwards, and there's no enthusiasm. No one is buying anything that's risk sensitive. No one is wanting to buy anything, so naturally it puts into question, are we about to start a massive sell-off? This is very reminiscent of how 2022 started, and also we got the avian flu going around. So it puts into question, is COVID coming back? Are the fears of COVID coming back? Is everyone getting PTSD from it? Or is this just basically one big nothing burger? Are the banks going to report in like crazy and subsequently push us higher? If we look at some of the bank stocks, they're not looking healthy at all. Looking like Wells Fargo wants to break the 50. We got JP Morgan doing something similar, trying to just break out of this trend it's been in, but they're not able to do it. So if you guys are excited for any single bank earnings, start in the comment section below. Maybe we'll cover it prior to their earnings. And I will be going on vacation for a week, so Fatal will be doing all the videos for you guys. However, I will be on the Discord, so if you guys want to check the Discord out, link in the description below. If you guys want to see the weekend deep dive, it's queued up over here for you. And thank you again so much for watching, and I hope to see you in the next one.